Another volatile week ends with some sharp cuts. The Nifty loses 1.6% this week, falling below 10,300. Mid-caps also see similar losses.
And there's simply no stopping the fall in NBFCs, with housing finance companies taking it on the chin. India Bulls Housing Finance is down 30% this week. DHFL is down 28%. And PNB Housing is down over 20%.
Auto Index was another bad performer this week, losing over 4%. Metals lost 2%. Pharmaceutical companies and FMCGs were the only two indices to end in the green.
And in key earnings to watch out for, in fact, that came out with its set of numbers, Infosys gets a thumbs up from investors after reporting a revenue growth of over 4%. Reliance Industries stumbles after gross refining margins dropped to its lowest levels we've seen in the past 2 years. And Hero MotoCorp shed 6% this week after reporting a 3% drop in its profitability.
Well, those were the top market stories. Hello and welcome to Taking Stock, the Fear Factor. This is the show where we take stock of the week gone by, tell you all those fears that pulled the markets down, and try and prepare you for the next trading week. I'm Lata Venkatesh, with me my colleague Nigel D'Souza. Hi Nigel.
Hi Lata. Well, we thought it was another roller coaster week in the past week. The bulls seemed to have the fight back in them. From around 10,150, they moved all the way to around 10,700. But then the bears came back and they took control.
Well, actually, my sense was that there are both global and domestic factors which were conspiring against. Global factors being largely the rise in US yields, which continued to keep risk aversion not only towards EM equities, but even towards developed market equities. Right. So we couldn't escape the overall theme of risk aversion. Perhaps the fact that that risk aversion also brought crude lower was a counter to the negative news for us. But domestic woes, I think this realty companies and to what extent housing finance companies are exposed to them is a big bother for the market. And even after 2 days of fall, Wednesday and Friday, one is not sure that the market is satisfied that valuations are apt. Because this is an unquantifiable fear. Yes. Probably somebody has to do a granular detail and come out and say, these are the guys who have a problem, maybe some regulator or government or NHB. Until that happens, I think this is going to repeatedly attack the markets. My sense, therefore, is that the worst may not be over. And of course, as you pointed out in the headlines, Reliance and Infosys did well in terms of many aspects of their earnings. But the market is only looking at the negativity at this point in time, and Reliance took it on the chin after the numbers. And Infosys, after a day's good performance, again, the visa woes seem to be hurting everyone. But what stood out for you in terms of stocks? Well,
Lata, if you take a look at it, the markets were down just around 1%. The Nifty was down a little more than 1%. The mid-cap index as well was down close to around 1.5%. But you go deeper and you'll see that, thank God for ITC, at least that held one end up. If that was down, then in fact the markets would have been down a whole lot more. Auto stocks, they as well didn't get spared. When you see in a single week, when you have Aichi Motors, Maruti, both of them lose between 7 to around 8%. Hero MotoCorp as well as Tata Motors, after such a sharp fall, that stock continues to fall as well. But the problem pocket, Lata, was what you were talking about. Some of these NBFCs, these real estate exposed companies, likes of India Bulls Housing Finance, falling 30%. The stock is more than halved from the January 2018 highs. So that's taken a sharp knock. And even the Bajaj twins did take a sharp knock. DHFL approaching the 200 rupee mark as well. And a whole host of them, even something like a Piramal Enterprises that was at around 3,000 rupees just a short while back, that has breached even the 2,000 rupee mark, telling you that even some of those high pedigree names, they are not being spared. And finally, if you don't get it right, or in fact some of these stocks like Mindtree, which are up more than 50% in this year, if they deliver average results, the street is punishing it. The stock was down close to around 15% in reaction to its numbers. So some of these stocks are really getting hit very hard.
Okay, actually, after all those currency tailwinds, IT is now in payback mode, and of course NBFCs are paying back the ecstasy of 18 months or 2 years. So everybody is paying back the gains that they got, and we are still searching for new leaders. Probably private banks will be the next leaders. But joining us to discuss exactly that, we have with us Saurabh Mukherjee, a veteran, of course, of the markets, founder of Marcellus Investment Managers. In a bit, we will also have a technical expert, Ashwini Gujral, joining us. But first, Saurabh, welcome to the show. The first question is really that. Where do you hide? Are private banks the place to hide? Or should you be in cash?
I think if you take a 2 to 3 year view, Latha, I still think, in spite of the rally that IT services stocks have had, I still think there'll be value there. It's reasonably clear the rupee has significantly more to fall. It's not tenable that the rupee will stabilize at 73, 74. Given that the RBI will have to keep the system flush with liquidity to prevent the deepening of NBFC woes, the rupee will be a casualty of the central bank's need to keep the system flush with liquidity, and therefore both IT and pharma and the elements of manufacturing, auto, where there's an export linked element, I think will hold up pretty well. I also continue to believe that FMCG will hold up pretty well. There is no financing linked element to FMCG in the way that there is, say, in auto. I think FMCG will hold up very well. And on the private banks, I would wait a little while longer. I'm still not convinced that the private banks, whether it's ICICI, Axis, indeed HDFC Bank, Kotak, I'm still not convinced they're sort of cheap enough yet. But yes, HDFC Bank and Kotak look to be the best placed of the entire banking and financial services pack.
Now, I don't know whether you looked at things so granular. The Federal Bank numbers, South Indian Bank, all of them showed an arresting of slippages at least. So should one look for value, at the mid-cap level as well in banks?
Yeah, the reason I'm saying hold off on banks a while more, my reckoning is economic growth is going to slide sharply in the coming quarters. I think 1Q was the 8%, 8.2% print. In 1Q was the sort of the top of the economic cycle, and I think we will come off sharply on economic growth over the next 2 quarters, and I think next 2 to 4 quarters, I think economic growth will be a challenge, and therefore SMEs, whether they are NBFC's clients or banks' clients, I think SMEs will find life getting tougher. If YOY, your cost of borrowing is up 200, 250 bips, then SME NPA numbers will edge up. And residential real estate in totality, whether it's NBFC-funded residential real estate or indeed bank-funded residential real estate, I think there'll be NPA jumps there as well.
All right, Saurabh, you're telling us that the rupee has more downside in store, but what about the Nifty on the whole? Just around 10 days back, you were mentioning that you believe that there is still more downside for the Nifty. Where does it base out? 9,500, 9,600 odd levels? Is that a level that you'd be looking to deploy some money?
Yeah, So I think the way to think about it is what would fair value be for the Sensex or the Nifty, and I reckon if the Sensex around 30,000 and Nifty around 9,500 would be fair value. And you're absolutely right that whether it'll happen next week, next month, next year, who knows? But you're absolutely I've also already put trades on where if certain stocks fall another 15%, 20%, I've already told my brokers to start buying those names if those stocks fall another 15-20%. After a long while, we're starting to see value surfacing in the Indian market. It's easier to see the value surfacing in export-oriented sectors. In sectors such as banks, such as auto ancillaries, I'm still waiting for a 15-20% correction, but my reckoning is there's a reasonable chance that comes through over the next 6-7 months.
Okay. You did speak about foreign exchange and mentioned pharma in passing. Pharma has other problems in terms of, the FDA issues repeatedly and quite unpredictably. Is that a place to seek shelter now?
Absolutely. I've been saying this for the last 3-4 months, and I appreciate that for all of us, the sort of non-linearity of the unquantifiability of the FDA threat hangs heavy. But the frontline pharma names came off so much last year that at these sorts of currency levels, you are bound to see Pharma pick up appreciably, Pharma earnings pick up. So forget trying to second guess the share price. That's in the realms of the unknown. What you're largely focused on is do we have some visibility that earnings growth improves for Indian Pharma? And I think the answer there should be an emphatic yes. This sort of currency tailwind with more to come will help Indian Pharma, and rather than having to go down the market cap spectrum, even in large cap Pharma, I think names like Dr. Reddy's, Lupin, there's enough there for us to look at there and savor the value.
No, Saurabh, I was wondering, why are you so bearish on growth? Isn't this finally the year where we are going to get 15% earnings growth?
Like several other people, I have to confess, till a couple of months ago, I too was of the view, in spite of my sustained bearishness on the business model of NBFCs and HFCs, I too thought that we finally get the growth, we finally get the double-digit earnings sprint that we've been waiting for the last 5 years. But I think the sheer scale of the challenge, facing the NBFCs and HFCs, Lata, suggests to me that the entirety of that sector will at best be able to maintain the current size of the loan book. I can't see how NBFCs and housing finance companies in our country show any loan book growth over the next 12 months. And given that they were the main source of growth funding for SMEs in our country, I think SME funding access becomes a challenge. And SMEs, as you know, account for 96%, 97% of companies in India are SMEs. So you've got a funding crunch in SMEs, funding crunch in NBFCs, I'm sorry, which ripples into the SME sector with impact on employment and consumption, and I think we've got to be at least mature enough to take a forward-looking view rather than harking back to 1Q, 2Q numbers and saying those numbers were fine, so hence the rest of the year will be fine. I think there will be a growth discontinuity in the second half of the year, driven by the funding crunch in the NBFCs.
So, Saurabh, what kind of a nifty EPS growth are you factoring in for this year? We started off the year expecting anything between 23 to 27%. That was tapered down slightly. Realistically, is this the year to see at least even maybe a 15-20% EPS growth on the nifty EPS?
No, I think, look, I mean, anybody in India who expects high teens or low 20s earnings growth, I think is sort of living in some other fantasy world. I think 13, 14, 15 was in the realms of possibility. 13, 14, 15% EPS growth was in the realms of sanity and possibility at the beginning of the year. I think now we're looking at, in anywhere between 5 to 9% as a full year earnings growth picture.
Oh. Okay, well, Saurabh, how bad does it get for NBFC? I mean, almost the entire market is holding some kind of NBFC paper in some form or the other. Those who are holding ETFs are holding it. Those who are holding, mid-cap mutual funds are holding it. How bad does it get? Is it as bad as it got for the infrastructure and real estate companies from 2008 and the fall that we saw, 5 years later? Does it get as bad as that, many of them getting penny stocks?
So look, I think I was on the same show on your channel three weeks ago, and at that time we'd had the DHFL scare around DSP selling some DHFL.
Sure.
What we're now seeing 3 weeks on, and I had said then, and I think broadly speaking is panning out, we're now seeing the underlying credit quality deterioration come through. So the builder defaults, I think, have started in significant numbers. I think the real estate developer defaults will come through reasonably thick and fast now. These guys, as you can imagine, right, the real estate developers were already sort of on the edge, and this funding freeze is toppling the developers into the abyss, into default. And I think now we see the fundamental movement. So far it was conjecture, rumor, etc. But now the real estate developer defaults will come through thick and fast. And off the top of my head, there's at least 3 large NBFCs, HFCs I can think of, who will have 3-4 times their share, 3-4 times their net worth lent out to real estate developers. So now the sort of the underlying economy, the underlying real estate piece starts sliding, starting with real estate developers who were the weakest link in the chain for a long time, and I think that link in the chain now gives way, exacerbating the challenges of the NBFC HFC sector.
Well, Saurabh, what about the IT space? If we're going to see the rupee weakening, that could be one sector that should do well. But some of these stocks have given you a correction of nearly around 10-15%. TCS, case in point, that's at around 1,900 rupees. Was that around 2,300 rupees odd? So would you look at, getting some exposure to the IT space? Because that index as well is nearly 12-13% of the recent peak.
Yeah, I mean, I just wanted to add, even Mindtree, after the numbers cracked rather badly, and it appears that those visa woes will rear their head again next week.
Sure. So again, there'll be much like the FDA-related stuff in pharma. There'll always be some chatter or the other around visas in that context of IT. I think October, November last year, I started shouting from the rooftop that IT looked attractive. My reckoning is there's still value to be had. Obviously, the frontline IT stocks have priced a decent amount of it in. So in mid-cap IT, something like L&T Infotech looks to me to be a well-run mid-cap tech company. In the frontline names, TCS remains a company I've liked for a long time. It was deliciously cheap. It was deliciously cheap a year ago. I remember it was trading at 15 or 16 times earnings a year ago. It was trading basically at the dividend yield. It's not as ridiculously cheap as that, but I think there's still value there. So if you do a little bit more homework, if I did a little bit more homework, I'm sure in the mid-cap IT space there is joy to be had, because if you have a currency sliding from 63, 64 in Jan to 74 now, and with more to go, it can't, this sector will have 3 or 4 really brilliant sets of earnings.
Oh, yes, and Infosys telling us that for the first time their order book is $2 billion. Up until 3-4 quarters ago, they used to speak in millions, 700 million, and hired 7,800 people. So clearly, you won't do that unless you have, a damn good idea of a very strong order book coming. So perhaps that's the place to be. That's Saurabh's pick. Thank you very much, Saurabh, for joining us and taking us through what looked like a very treacherous week for the stock market bulls. We have to take a quick break, but before that, here's some more expert opinion that we got through the week on the rising concerns in the non-banking financial space.
We know that the bad loans are very numerous in these banks, and probably the numbers that we're seeing are not exactly accurate. They're probably worse than it looks. But given that situation, there are probably some good opportunities in some of these non-bank finance companies, for example, and other areas in the financial sector in India. So we're looking at that very carefully.
This is a liquidity issue and not an asset quality issue. But given that they are going to be shrinking, the slack has to be taken up by the banking sector. Now, the private banks are already operating at close to 98% credit to deposit ratios. So their maneuverability in terms of significant growth, unless the deposit growth picks up significantly, is going to get challenged.
With reference to housing finance companies, I would urge through mechanisms like NHB to significantly increase the refinance lines, a much greater integration across regulation and regulators, much greater communication also with a marketplace which is so much in the listed and open space, where even a small transaction in debt of a few hundred crores has disproportionate impact.
NCDs and bonds are being issued, but I think from what I can estimate, the volumes are about 20% of what, or 25% of what they used to be earlier. So we need to get to at least about 50-60% of the normal volumes so that the cycle keeps on flowing. I think the next 2 quarters, there might not be growth at all. So overall, you should expect a much muted growth.
Back to taking stock, fear factor. Joining us now is Ashton Iguchi with his view on the technicals for the next week. Well, Ashwini, there was a fairly seminal drop this week. Do we look at support at around that 10,140 level? That's from where we took some kind of, support the last time around. Or do you think things can get worse from here?
Well, let me try to explain it. Before, the 10,150 and, 10,700 happened, we were doing a range of broadly 10,250 to 10,550. So I believe this 150 points on either side were excesses. So basically, we remain in this 10,250 to 10,550 range, and within that, you had yesterday's drop and today a bit of rally from today's low. But overall, we remain range bound. Now, what will happen is that IT has broken down, whereas banks are finding support because of better macro, etc. So, the range is so wide and volatile that this range needs to narrow down before the next phase of trending starts. So, my sense is that Monday itself we should have a rally because of HDFC Bank or whatever. Because today, post 11 o'clock, you did not have any further drop, and the market basically remained sideways, which meant that 10,250 is holding on. So that way, maybe another couple of weeks of sideways news, going all over the place, but broadly holding 10,250 to 10,550.
Okay. If that's the kind of rise also you're expecting the market, who could be the leaders next week? Would you go long on the banks?
Chances are, because obviously things are a little better. Also, Reliance may, it recovered from the lows today. That may provide support. So, random stocks will keep moving up unless there is, fresh bad information that 5 lakh crore or 6 lakh crore is now in trouble. Unless that happens, and that's an outside case, you should expect to be range bound, and non-IT will play up, and IT, which was due for a correction anyway, will use this opportunity to come off.
Well, if IT is going to be coming off, Ashwini, could you give us some specific stocks you want our viewers to watch out for in the coming week?
See, the themes I have chosen are FII dominated themes because they have given ample evidence that they want to go. So the idea here is that Infosys, it sold off today. Chances are next week will also be bad for Infosys. This is a sell with a stop 690, target of 655. TCS, which needs a correction, that is a sell with a stop of 1910, target of 1850. And HDFC, which has nothing much to do with lending to realty, that is a sell with a stop of 1670, target of 1610. So on all rallies, basically anywhere close to 10, 450, 500. And these are the stocks which will again start to face selling.
Okay, so a no-no on FII favorite stocks. What about Pharma? It stood up this week, didn't it, Ashwini? It's not worth, extending a long position here at all. Is it a random move, you would say?
See, Pharma is way ahead in its, corrective cycle than many other stocks. It's gone through its bear market. So, yeah, it won't fall, but will it, start to rise and give you 6, 7, 8% moves? Those will be random. I think the banks are fairly oversold, and there are odds that, next week's, upswing could be led by financials.
Well, Ashwini, just another question on NBFCs. Should anyone try to hold this falling knife?
I won't think so, because financials after a bull market, you get to find out what they did, how those growth rates came in, etc. And people are saying, HDFC, Bajaj Finance are safe, but they also come off. So if financials are coming off, everything will come off. That overweight position needs to be worked off. All of this bad news is just doing that. It is working off the overweight position. All kinds of explanations, etc., will not help in a market which wants to sell down financials.
Okay, we'll take that warning on board, Ashwini, and thank you very much for joining us. Have a great weekend, Ashwini, and all of you out there. And you will have to brace yourselves for a very busy next week. For one thing, for Nigel and me, it's full 5 working days. But more importantly, 13 nifty companies are declaring their numbers. So lots to watch, lots to analyze, and lots to understand from the experts at CNBC TV 18.